Equities around the world have benefited from central bank monetary policies. But what's coming around the corner? You came here for the truth, so let me unveil that for you. Today, let's begin with the G3 central bank balance sheets. It's something that I show very often here because it is so clear. Compare this to the MSCI all-country world stocks, and you can see that this is heading straight to the moon. If you look at these two, you will see that they are corresponding completely. They are correlated to such a degree that you can't tell them apart. Central banks print money, they buy shares, stocks rise. It is a very simple formula and has been working since the financial crisis. Many people would like to ignore this, but this is a fact. That's just the way it is. When you look at what's happening within the markets, understand that nearly 100% of all trades are done by computer algorithms. These algorithms help to maintain these prices that you see. They control the markets. They manufacture the prices that are out there on these different markets. Number of months that the MSCI All-Country World Index rose. We are looking at the highest ever. And that's something that's an anomaly. This isn't supposed to happen. Now, what I suggested in other videos before is that we will have times in which one part of the world does better than others. For example, you'd have areas of South America, compare that to areas of Europe or maybe North America, Asia, and you would see that there are different pockets. And you go even deeper in, and perhaps you would see that Germany is doing better than Italy, or you would see that China is doing better than Japan, for example. But it isn't the case historically that you would find all stocks rising or all stocks falling. There are different cycles, there are different patterns, there are different instances that have occurred throughout history. Since the year 2000, that has changed. It doesn't exist anymore. For the most part, of course, these are generalizations. It's all a result of central bank intervention that's going on since 2000, but also more so since 2009. As soon as they decided to intervene and do something they've never done before, this has created such a big distortion within the markets. This is the MSCI All-Country Index. Looking at this, just in 2017, the markets have skyrocketed. But looking back even through 2009, it's pretty clear. Intervening in the markets does a great job for equities. Of course, you're devaluing the currencies, but that's okay because that's their intention anyway. And let's just look at this quickly. Despite all that bad news, all that chaos that could result from what's going on in this particular country here, the market shrugs it off and it doesn't matter. The volatility index doesn't matter. All we need to do is look at central bank intervention and it goes through the roof. That's what happens. Nothing matters anymore as long as the Fed, as long as the BOJ, the ECB, and the rest are willing to print money. Switching gears here. Russia's finance ministry has hired banks to organize its first ever sale of yuan bonds as the government braces for a possible U.S. sanctions on its sovereign debt markets. I think that this is important. We are talking about, not a small sum, but this is $907 million worth. I think it's important to note this because you can see the ties economically, politically that's going on between Russia and China right now. They are becoming the best of friends in the world, I assure you, and this is something that is just going to continue. You could see how they're creating their own bloc, the BRIC nations, they have the AIIB, they have all these different factions that have been growing. It's taken some time, of course, and surely they will need a long, a lot more than what they have today to take down the hegemony of the US and the West, but it's very important to see what they're trying to do. They're trying to circumvent all of this. I mean, Russia's even saying they're going to create their own internet. You've heard that before, in fact, but they've made that mention yet again. It's very exciting anyway. Cheaper debt. Despite sanctions threat, Russian borrowing costs have fallen this year. And that has surprised many people. I just thought it would be interesting. This is the bond, 10-year Russian bond yield. I thought that it would be interesting to show you this here. You can see what has happened as a result of all of this. I'll end it right there. If you found this video informative, then please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, they have a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.